Hey everyone, I'm Charting Man Dan with the Chart Guys. We're going to check in on the market after we had a bearish reaction to jobs numbers to end the week, a break of support, lack of follow through at the moment, but the market is pricing in decreased probabilities of cutting of rates in 2025. We'll see where our major sectors stand as the financial sector bears making a statement today. All right, so we can see the S&P 500 had this tightening daily range that we've been watching since the FOMC, and this is a bear break. At the moment, we can say there's a lack of follow through, but we also ran out of time on the day. We broke bear. The hourly RSI was down approaching the teens. We got the hourly bounce, but the bulls have not proven anything yet. If I'm going to call that a bear break with no follow through and start scouting a potential falling wedge, I have to see an hourly uptrend confirmed to the bulls. I need the bear break of daily support right into an hourly uptrend. That shows us a bear break with no follow through. If that were to happen heading into Monday, I would then be keeping an eye out for a potential falling wedge, looking something like this. But at the moment, I'm not looking for that just yet. Again, have to see the bulls prove something on Monday for that to be the case. If not, let's say we do get bear follow through. And again, this is the zone that I'm watching because we held it back here. We held it at the FOMC low. We held it here. And now we're right there within it. If the bears follow through from here, I'm now looking down at the next support level. Let's go to SPY. And that next SPY support level is down at 565.99 as the next level. We have a lot of things starting monthly consolidation, SPY being one of them. The last monthly higher low was down at 507, which means we can drop 15% before we get there. So what does that mean? Bigger picture, it means we're looking for a monthly higher low to be the most likely result of this consolidation. In an ideal world, daily oversold marks monthly higher lows for strong uptrends. If you go back and look at SMH back here to end, let's see, in April, that was a daily oversold to mark a monthly higher low. We also saw gold do it at some point, I believe. No, maybe it wasn't gold. Anyways, that's how it plays out for our stronger uptrends. So question number one in the next week, can bears follow through with another leg down? And then from there, I'll be keeping an eye out for daily oversold conditions. NASDAQ is very similar. Again, we've got this support zone. Yes, it's a break. No, there is no follow through at the moment. Can the bulls confirm an hourly uptrend on Monday? This is a standard hourly equilibrium at this point. The NASDAQ bounce was a little bit better because of semiconductors having a bit of a better bounce. The weakness in the S&P 500 the second half of the day was healthcare rolling over to join the bears and the energy sector closing fairly weak. Also the financial sector, of course. We'll look at that in just a moment. So if the bulls confirm an hourly uptrend to start this coming week, we look for the falling wedge type of setup. And there's tons of historical examples where falling wedges do mark longer term higher lows. I don't have any queued up here, but over the last bunch of years, it's happened a lot. So I will be watching for it. But again, if bears follow through, pulling up QQQ, we're going to look for, and again, this is the first close below weekly EMA 12 support in 3.5, 4 months. But we'll be looking for the monthly to set a higher low, anything above 422. Again, we can drop 15% before we get there. And we're going to watch for a monthly higher low to be the result of this consolidation. We also have a nice clear daily downtrend at this point. The bears have full control of the daily chart as long as every bounce just keeps setting lower highs. So that's going to be one of our guides as well. This is the first time that I can look and say bears have proven something. I mean, I'd go all the way back to August since the last time bears proved something. So it's been a while. Tesla trying to hold the recent lows. The weekly chart, we know bigger picture is looking for a weekly higher low. We had a weekly inside bar this week. I'm scouting a potential re-entry. Again, scaled out of my short at an average exit in the 340s. I mean, my long, I should say. At an average exit in the 440s. And now looking to reload, but being very patient. I am watching this base of support in the 370s trying to form. I didn't have any confidence longing today with the weakness we were seeing in the broader market. But again, one of the better bounces on the hourly this afternoon and much less consolidation. Again, even just comparing that to the NASDAQ, NASDAQ topped out and gave back over half the bounce. Tesla didn't come close to doing that. So Tesla hourly higher low will be the most likely scenario on consolidation. And I just know that it's in play for me this coming week to potentially give it a shot off of those 370s. But I'm in no rush to go long after the bears finally prove something for the first time in a while, being patient. So the semiconductor bulls failed to hold the back test of this resistance zone. We broke above it, we came back and tested it and fell through it. So that's a red flag overall. We also have a lot of space for a daily lower high to be the result of the next bounce on these semiconductors. Weekly time frame, choppy, bull break, no follow through. Could this be a rising wedge on the weekly chart? Yes. If you are bearish in the market, you would love to see this break bear. Bigger picture. I'm watching some of the laggards trying to show some strength. MU, look at this base of support on MU. So MU is smack dab in the middle of this very long-term range we've been trading in. SMCI is trying to shape up a weekly inverse head and shoulders, struggling to do so at the moment. So I know I'm keeping an eye out on a couple names if the bulls are able to show back up. So if the NASDAQ does try to start giving us a daily rising wedge, I am looking at semiconductors and MU and some of these names on the long side of things. But again, first time bears prove something. Nothing wrong with pumping the brakes, playing bearish, of course, on some of the weaker names, but waiting for more info for me before looking long again is essentially, I'm on pause for looking long over the next couple of days at least. Healthcare held on better, again, rolled over into the end of the day. Weekly bear flag is still on the table, and this weekly downtrend has been a great guide. Just lower highs and lower lows for months. So nothing changes as long as that is the case. And on the current bounce, anything under 147.12 is just a lower high. There's tons of space for that lower high to form. Financial sector rolled over in a big way today. This was the first red flag for me because the financial sector has been in this tightening daily range, and I knew this was going to be key, the direction that this breaks, for the S&P 500's daily equilibrium. And we had a bear break of this daily support level, and that happened in the first 10 minutes of trading. And so that for me was, red flag. And then you could see after that, there's the first 10 minutes, NASDAQ got another solid leg down, S&P 500 did. So that helped me prevent me from looking long on the initial drop. But this is important. This is, we're back in gap fill. There's a gap down to 46.53, but it's important because this is the weakest, this is the lowest price we've seen in the last couple of months, we'll say 2 months for the financial sector. And again, this is the first close below weekly EMA 12 support since all the way back in June. So 7 months we've been holding this. Now it is lost. We go to the monthly consolidation underway. Again, not going to forget that a monthly higher low is most likely. Bitcoin's on the verge of monthly consolidation. A monthly higher low will be most likely there. So that's the case for many things. But again, we have to recognize monthly consolidation is underway. And that is the case for the financial sector. IWM had a daily bull break with zero follow through, ended up being a weekly bear flag. So now that weekly downtrend is confirmed. We zoom out, monthly consolidation underway. Less space, I'm less confident saying a monthly higher low is most likely on IWM than a lot of other names, but anything above 195.45 is a monthly higher low. So I'm now going to be watching bigger picture over the next couple of months for a monthly higher low eventually in many places in the market. But again, no rush to be jumping long right away unless we're green Monday and we start to shape up a potential daily falling wedge in the NASDAQ and S&P 500. Dollar, fresh highs, bulls in complete control. We came right down to daily support and held it. A little double bottom there into continuation. We've been holding daily EMA 12 support for the last month, and we are seeing the highest levels that the dollar has seen in years. So all of 2023, all of 2024, and now the next major level is 114.78. But with that, we had gold and silver strong today. So gold's trying to get back to the upper part of this range. That's the major resistance. I'm watching these key supports. But again, gold's a monthly bull flag. There are no red flags on this monthly chart whatsoever. So holding well. Silver is a potential 2-day falling wedge, trying to set up a monthly high or low. Again, monthly EMA 12 support test. That's where we bounced last monthly consolidation. Go to the 2-day chart. I'll probably just tweak this line a little bit to see if we can break it on Monday. But this is a pattern that I'm watching. This breaking bull would be the first baby step towards a monthly high or low forming on silver. Miners also have a lot of work to do still. They're looking for a monthly high or low, GDX, but clear weekly downtrend still here. I haven't really cared about miners much recently, but obviously if gold's a monthly bull flag heading to new all-time highs, miners will benefit. Oil. Well, one thing we can say is gold is positioned really well for any dollar consolidation. The dollar bull rip the last couple of months is not hurting gold. Oil, we knew the volatility was coming. This tight range broke bull. Really nice follow through. And now we're on the 2-month time frame testing resistance. We're in this 2-month tightening range. It's all about 81.33. So again, I'm just viewing this as a big bull bounce, higher low, lower high, higher low, lower high, higher low. And we're coming up on resistance here. Bull flag confirmed. New daily higher low support, 72.84. Plenty of space for a weekly higher low next consolidation. But again, we are entering a resistance zone now. And we'll see how the price responds. But that's helping the energy sector. Still riding this long at this point. A lot of profit taking today overall, but still a very significant bounce at this point. Have we seen 50% bounce retracement? Yes, we have. What does that mean? That means a weekly high or low will be the most likely scenario next consolidation. Then the bulls will have to, whenever we top out, the bulls will have to confirm the weekly uptrend. Natural gas, nice recovery. So we had the gap up open last week, gave it all back, filled the gap, and now back up to the highest daily close on this move. Again, my target's in the $5 range if we're going to get there at some point in the coming months. But just letting it play out, not actively trading this name. And again, my target in an ideal world is that natural gas gets over this wall in the upper $4 range because things really open up once you get into the $5, $6, $7 range because of how fast we dropped on the way down. All right, that's where we stand. So bears making a move. Again, hedged up where, I still have a little bit of a long lean in my IRA. So on a day like today, I take a little bit of a step back just because I have, exposure in a number of places, but hedged up. When, I did the video at some point back here, I was talking about how this is a gift to be hedging in a sideways range with a stop out right above there. And then we had, of course, these lower highs. QQQ gave us a gap up open when we're scouting a daily lower high. Just a good number of hedging opportunities to protect within the equilibrium. And I'm not exiting those hedges anytime soon because they're serving their purpose. But again, I will be open to looking long if the daily falling wedge shapes up in the NASDAQ and the S&P 500. If not, I will be very patiently waiting for a monthly higher low to shape up. And that means maybe getting to daily oversold conditions if the bears do follow through. As far as shorting, plenty of names where daily lower highs are the most likely result of the next bounce. We've got, of course, semiconductors, big enough pullback. There's a lot of space for a daily lower high next bounce. Financial sector, space for a daily lower high next bounce. So patient bears are waiting for daily lower highs at this point. This morning, I said patient bears are waiting for hourly lower highs because we were oversold pretty extreme on our futures chart. We got the hourly bounce, set those hourly lower highs in a bunch of places. But tomorrow, or I should say next week's a pretty important week, just in terms of follow through or not. We don't have that question yet. Bears are comfy. They like the end of the week, that's for sure. And Monday, Tuesday, going to give us a good bit of new information. As far as quantum stocks, put out a video yesterday. That's on our YouTube channel. Check it out. Other than that, hope you have a great weekend and establish those game plans. Again, multiple scenarios. Have a game plan of where you're going to be focusing if a falling wedge is going to shape up. Have a game plan of where you're going to be focusing if bears followed through. As always, do good things. We got us a snow day. Gonna fire up the sauna, get some cold plunge going. Bone broth cooking. Sweetie gets the meat remains. Life's good. She's pumped. Oh, yeah.